Hello, and thank you for joining our third annual Day with DISA. Before the session gets started, let's go over a few things. A copy of the presentation will be available to download once the session has ended under the Materials section. If you have questions about the information in this session, enter them in the Q&A section below, and the speaker will answer them once the session has ended. If we don't get to your question, we'll reach out to you at the end of the conference. If you have questions about the topics or trends that are mentioned throughout Day with DISA and how they pertain to your company, and you'd like to reach out to one of our team members directly, hit the chat icon at the bottom of daywithdisa.com and you'll be connected directly with one of our team members. Thank you for attending live. Each of our live attendees is eligible for our prize drawing at the end of the conference. And each session that you attend live increases your chances of winning either a Nintendo bundle or a brand new iPhone 12. Finally, I'd like to take this time to thank all of our sponsors for their participation in Day with DISA. Specifically, I'd like to call out CRL, our title sponsor for 3 years running. We'd like to thank our platinum sponsors, OraSure, Quest Diagnostics, Samba Safety, and Psychomedics. All of our sponsors' support is greatly appreciated. With that, let's get started. Enjoy your session.
Hi, and thank you so much for joining us for this session of Day with DISA. Today, we're talking about fleet management, and we've got two of DISA's leading experts joining us today to present. We've got Charles Farone, area leader, with 18 years in the industry and 7 with DISA. Charles, thanks for joining us today.
Thank you very much. Great to be here.
Perfect. And we've got Ray Proctor, who's got 15 years in the industry and 2 years with DISA. He's also an area leader at DISA. Ray, how are you doing?
Doing really good, Thomas. Thanks for the intro. Looking forward to sharing some knowledge with you guys today.
Awesome. Well, hey, without further ado, Charles, take it away.
Thank you very much, Thomas. Today, we're going to be talking about achieving true fleet management and what that means. There's a big question. When you're managing your employees, but are you managing your fleet? Licensing and permitting, tax recovery and refund, fuel tax reporting, and compliance. These are all things that help take your fleet from operational to compliant. Come take the next step with our industry experts, myself and Ray Proctor. What is fleet management? It's a broad set of activities, processes, and use of technology to oversee and manage commercial fleet operations, vehicles, and related assets, to increase productivity and reduce operational costs, manage risk, scale your business, and increase profitability to help achieve overall vision of customer success and service excellence. One of my favorite quotes, "You can't manage what you can't measure." That's really what this entire presentation is going to be about, managing by measurement. Peter Drucker, famous operational guru, what he means by this is you can't really know whether or not you're successful unless success is defined and tracked. That's really what this learning session is going to be about. It's about measuring performance, using data, real-time visibility, and the integrations of related but sometimes disparate systems to provide a comprehensive view of your fleet so you, fleet manager, and your team can make informed decisions. Elements of fleet management kind of all goes together. There's various aspects of fleet management that go together. 5 main buckets that we've identified and we'll talk about today. We have fuel cost and consumption management, licensing, permitting, registrations, and authorities. We have driver management, we have safety compliance, and we have asset tracking and utilization. And again, all of these 5 buckets, these 5 elements of fleet management, they're all interrelated, but they're all separate in a sense as well. And this is where we're going to get into fleet management software. Fleet management software is also a broad term used to describe an integrated, centralized technological environment that allows fleet managers the ability to cross-pollinate the individual components of fleet management into one holistic tool optimized for planning and executing the most important organizational goals and objectives. What this does is it gives you real-time visibility, brings everything together. It links all the related interdependencies together in one platform so that the user can gain valuable insight into how variables interact to affect outcomes and performance. Gives you business intelligence. It's predictive. It's consistent data for metric-driven business decisions that increase safety and improve performance. And also, fleet management software helps to reduce costs through automation and integrations. You could perform such as high-level activities such as load planning and execution, which saves time, and also billing optimization for enhanced cash flows. Just to give you an idea. I want to throw out here some fleet management facts. This is how important fleet management is and how it could impact your organization. Regardless of fleet size, in 2018, an annual benchmarking survey for government fleets reported that over 75% of fleet managers rely on fleet management software or vehicle telematics, so to speak, to aid and assist in support of day-to-day operations and safety management. Over 75% of fleet managers. Between 2003 and 2018, more than 29,000 employees died in motor vehicle-related incidents. Fatalities have a strong correlation to deficiencies in fleet management practice and procedure. And also putting this in terms of perspective, how much, how fleet management really affects your organization's performance. Just imagine 1 hour a day of idling is estimated to be equivalent to 58,000 miles over the life of a truck. That's one hour a day of idling. It's pretty impactful. Fleet licensing, permitting, registrations, and authorities. At this time, I'd like to hand it over to my colleague and partner, Ray Proctor. He'll help deep dive into to this area here of fleet management. Ray?
Charles, thanks for sending it over. Great intro there. So yeah, we spend a lot of time talking about the driver that's behind the wheel. Obviously, the focus of this session is to talk about that asset that he or she is operating and all of the important parts of that. When we talk about a fleet manager's mission statement, we're saying they need to track and manage the organization's assets to ensure road-ready compliance for all vehicles, regardless of location or type. We're trying to mitigate and eliminate any liability at the federal and state level when the vehicle is in operation. Basically, wherever that vehicle is moving, we need to have compliance in regards to state and local and federal laws. So we're talking about the top benefits of managing a fleet solution, asset operating in compliance with state and federal laws. We'll talk a little bit more about that in the upcoming slides. Fleet optimization and management across local regions, how you assign different assets in certain jurisdictions that make sense to your fleet, so you're maximizing its efficiency. And then reduce potential fines or late filing fees with state and federal jurisdictions. I have a slide later on in the presentation, excuse me, that goes into that a little bit, that shows the liability the financial liability in regards to not managing your assets, making sure they're registered correctly, making sure they're registered timely. You'd be amazed how much money companies are spending in late filing fees. Again, I'll give some data on that in a little while. The opportunities to optimize your assets, true asset management visibility for all units. So you know where your units are, you know what they're doing, what location they're allocated to if you have multiple locations around the country. The consolidating fleet data onto one platform. So all of your assets are in one location, snapshot to the management team. If it's at a local level, you can drill down to the point where you can manage local assets for that one terminal operating location. And then track and assign costs to multiple locations. So again, as you're moving assets around different terminal locations, how do you now assign that cost to that particular location? You can track that using true fleet management software. Next slide, please. So we're going to talk a little about operating authority and why. Some of this might seem basic to a lot of you folks, but we want to make sure that we cover it. So under the FMCSA and USDOT, you're required to designate whether you're an intrastate or an interstate carrier. These registrations allows you to move freight as a motor carrier across different jurisdictions around the country. There are unique identifiers for motor carriers. You're actually assigned a motor carrier number that's unique to you through the FMCSA and DOT. And then also some of the startup fees that apply. So if you're entering the market as an intrastate or interstate carrier, how you walk through these different processes and get to the point where you're operating on a compliant level. Next slide, please. So here's some of the steps to operating your authority. Again, this is basic entry-level information. So you're required to register with the appropriate state or county that you're in. That's very important. You have to obtain an EIN number. Most companies have that established already, but you're going to have that information handy to you. You have to actually register with the USDOT. A lot of this stuff can be done online. There's resources that we can share with links to make sure that you get registered correctly. You actually have to apply for a motor carrier number with the FMCSA, and then you file a BOC3. So all of those different parts in this process enable you to start your operating authority legally to make sure that you have all the information you need. Next slide, please. And then this is a continuation, kind of the second side to that, some of the other things that you need to think about. Of course, obtain insurance. A lot of these processes that we talk about today and a lot of the things that we're mentioning here, insurance is the key, obviously. You cannot operate any type of commercial motor vehicle without having insurance. That's a given. If you're moving interstate, we'll talk a little bit more about this in another slide. We need to help set up a international registration plan so that your vehicles, when they're moving in between state lines, are able to travel freely. You also have to set up an IFTA, International Fuel Tax Agreement. Charles will go into that a little bit more in the second part of his presentation in regards to fuel tax. You have to establish a unified carrier registration account that basically tracks the units that you have that are moving interstate. And then any sort of special permit that you might need, whether it's overweight, out of gauge, anything that's going to stop you from moving freely in that state that you're going to be traveling through. Next slide, please. This is a licensing and registrations table. There's a lot of information on here. It outlines the different needs that you're going to have depending on the weight of your commercial vehicle. Of course, obviously the table 10,001 to 26,000 and 26,001 and above, there are different requirements. So USDOT, we talk about this MCS 150. Is it required? It's required in both weight sections. You have to have that USDOT number. Motor carrier number, which I mentioned in a prior slide. All interstate commercial and for-hire companies have to have this MC number. It's key in this whole process. BOC3, that goes along with the required MC number. The IRP registration, again, if it's moving interstate across different state lines, there's a designation there in 10,001 to 26,000, and of course over 26. It's just giving you some of the outlines on the vehicle itself. IFTA, I talked very briefly about that. Charles will talk more again. That has to do with whether you're moving across state lines. You'll notice in the 10,001 to 26,000, it's not needed. But once you operate something that's GVWR 26 and above, you have to have IFTA. UCR registration, in both cases, you have to have UCR registration. I mentioned that in the prior slide. And then the 2290, that's a designation. It's a heavy highway use tax, and it applies to vehicles 55,000 plus. So all of those vehicles that you have over 55,000 plus, you have to once a year pay and establish a 2290 heavy vehicle use tax certificate for that particular vehicle. Next slide, please. So here's a table that shows a little bit more information on permitting. And permitting, we're talking about vehicles that are moving across state lines into different jurisdictions. There are several jurisdictions that have requirements above and beyond FMCSA and DOT. New York, you have to have a weight distance tax permit. The designation is if you're 10,001 and 26, and then obviously over 26,001, that does apply. That's actually a sticker that you have to apply for and pay for, obviously. If you're traveling through Kentucky, you need a weight distance tax as well. If you're over 26,000, 60,000 plus. New Mexico, if you're traveling through the state of New Mexico, they're also requiring a weight distance tax, only if you're over 26,001. If you're going up into Oregon, they have a weight distance and mileage tax certificate that you need, again, over 26,001. And then in general, any interstate carriers that are traveling across state lines that don't have an IRP account, and I'll talk a little bit more about that on the next couple of slides, need to have a trip permit and a fuel permit. Again, only if you're over 26,001. Next couple of slides, I'll get into it a little bit deeper with some more information about that. Next slide, please. So we talked about interstate IRP, International Registration Plan. Basically that designation is a portion plating. That's what you hear in the industry. So anybody that's traveling across state lines, different state lines, has to or should have an international registration plan and vehicles that are registered on that IRP plan. Benefits of obtaining an IRP account: you can travel through these different state jurisdictions freely, meaning when you cross from New Mexico into Texas, you can move freely with this international registration plan. There's a document in the vehicle called a cab card, and that cab card is designated so you can travel in these different jurisdictions without any type of issue. It eliminates the need for these individual fuel and trip permits that I mentioned on the prior slide, and it reduces out of service, meaning if you don't have an IRP and you don't have those permits that you need to travel into a different state, you will get stopped and you will be put out of service until you obtain those particular permits and licenses that you need for that state. Obviously, IRP allows you to move freely. Opportunities to optimize your IRP program. You're having your assets set up correctly to move across state lines. We've talked about that quite a bit here today. You have an established annual registration renewal in a given month. So all of the vehicles that you have on IRP renew at one time. So it's less of a headache trying to keep track of individual months. And I mentioned the cab card registration. It eliminates any type of driver paperwork issue as you're moving into these different jurisdictions. Next slide, please. So I'm talking a little bit about intrastate. So we're talking about vehicles, we call it base plating, that do not leave that particular state. Obviously, it's very common depending on the jurisdiction and state that you're in. But we look at both options. So when the benefits of having base plating, your vehicle is identified to that particular state and is restricted in a way just to travel within that state. It eliminates the record keeping for other states as you travel. We have to keep track of mileage with the IRP program. With base plating, you don't have to do that. And your ability to consolidate renewals with the local DMV and jurisdiction that you're working within. Lots of opportunities to optimize your base plating program. You can assign assets to specific states, ones that you know they're not traveling out of. You have this annual registration that we talked about that's established in a month, a particular month that makes it easier to manage for you. And you can manage the assets to comply with state and local emissions requirements. So in different states around the country, California being one of them, there's some very, very strict regulations on how old these vehicles are that can come into our state. It has to do with emissions, and it's controlled. Next slide, please. So I mentioned a little bit earlier in the program that I'd talk a little bit about mitigating late filing fees. This is a major part of our asset management solution and program. You'd be amazed, people don't realize the cost of late filing. I have an example here. This is an example here in California where I'm using a tractor trailer, using a rough estimate only for the annual registration, just to renew for the vehicle being around $2,800. And if that asset is not managed, and if it's not renewed on a timely basis, the clock starts ticking. And in the scenario here in California, 1 through 10 days that you're late, it's 10% of the fee. So obviously that's $280, and a lot of people would think that's not really that big of a deal. It is if you have 300 or 400 assets, or a large portion of that isn't managed and renewed correctly. Late registration 11 through 30 days. So we're talking about the first month. If it gets misplaced or somebody that's renewing this particular vehicle doesn't do it for some reason, now we're talking a 20% penalty, and it's $560 per vehicle. These numbers add up very, very quickly, impact the bottom line. It's really, really important that they're managed correctly. Late registration, believe it or not, we've had some scenarios where vehicles have fallen off the radar, and that penalty, day 31 through 1 year, it's 60% of the registration fee. That number is huge, obviously, and it just keeps compounding. Usually the local jurisdictions and the DMVs that we work with across the country, they do not mitigate these fees. They don't negotiate that number. It's a revenue stream for them. They're hoping that people don't renew their vehicles on time, and that's the way of collecting more revenue. So again, very important that these vehicles have triggers, 90, 60, 30-day triggers, where we're on top of getting that registration done timely so that there's no penalties and fees. Next slide, please. So at this point, I'm going to actually hand it back over to Charles. Thanks again for joining. I hope this information was useful to you, and we appreciate the support.
Thank you very much, Ray. Now we're going to dig into the other 4 areas of complete fleet management. If you recall, at the beginning of this presentation, we talked about 5 high-level elements of total fleet management. Ray touched base on the licensing, the permitting, registration part, the part that keeps you legal on the road. I'm going to touch base upon the other 4, and then we're going to deep dive into fuel tax management. It's your biggest expense. Your fuel purchases, as well as the tax you pay. But getting into what we have in front of us here, driver management. Fleet manager's mission statement for driver management is to cultivate an environment of trust, high performance, and safety through an effective employee engagement program centered on goal congruence, KPI performance management, and a shared meaning of productivity, desired behavior, and success. There's many benefits to a comprehensive driver management program. But to touch base on some of the most impactful is improve safety. I mean, that's really what we're in. Our main concern is always safety. As a driver manager, a safety manager, should always be concerned with this aspect of fleet management. And how do we improve safety? How does a a driver management program help improve safety. By centralizing training, policies, and setting safety standards to manage behaviors for maximum safety and compliance, helps you achieve better behavior through an investment in human capital, which allows you to avoid high truck maintenance fees, issues with meeting delivery turnaround times, customer dissatisfaction, reducing or eliminating citations, roadside inspections, accidents and violations, bad CSA scores, and penalties and fines. It allows you to prioritize telematics compliance and training, eliminate distracted driving and accidents to reduce fines, and helps to streamline the vehicle inspection process with predictive scheduling and improve preventative maintenance. Also helps with driver retention and building relationship wealth, something I like to call relationship wealth, building a relationship with your drivers through enhanced employee engagement incentive programs, incentivize safety with reward systems and for desired safety performance. And sometimes, we like to make it a game with safety scorecards, keep your drivers engaged. And finally, increased efficiency and driver accountability. Automation and reminders help to create an environment which helps the drivers remain safe and become safe. Real-time on-demand reporting will further give you, the driver manager, the much needed visibility into real-time behavior, real-time data, which you can make informed decisions on. Helps you monitor out-of-route mileage and help to optimize routes, and also helps with KPI measurement and management for performance. And finally, it helps you to track fuel purchases and consumption. Top 3 opportunities too. We like to break this down into 2 areas: benefits and opportunities, how you can further leverage your driver management program. You can do this with leveraging in-cab technology. Technology such as GPS and ELD and dash cams for real-time visibility to driver location, duty status, critical events, and behaviors for immediate corrective action. Helps you identify areas such as hard braking or speeding, when drivers go out of route, and in-cab coaching. That's even also a possibility. Provide the tools. This helps you provide the tools to succeed and navigate the road ahead. Another area that you can help, or that can help with the technology aspect, is in-cab instant messaging in the cab. This effectively just helps make the job easier by taking the guesswork out of navigation and eliminating paperwork, leveraging automation, automated reminders to ultimately improve the relationship between management and the driver, providing them the tools to succeed, making that investment. Another opportunity is to integrate your driver qualification file management for maximum compliance and talent retention. So incorporating this into your driver management program is also an opportunity. And finally, applicant tracking and talent management. Your pool of applicants, your talent pool. Driver management, it just doesn't have to do with the drivers you have currently on your roster, but the ones that you could have, or the ones that are in front of you, the ones you wish to explore, go further with, and see if they'd be a good part, solid part of your team. Safety compliance, that was another element of total fleet management, the safety aspect. If you could see, a lot of these things are really starting to intertwine together. They could be viewed separately, and they also accordingly could be viewed as interrelated. Safety compliance. The fleet manager's mission statement is to harness and cultivate a culture of driver safety for that of the driver, the company, and the general public, and to find balance with that of the organization, its operations, and its goals in a comprehensive safety management program. So, benefits of a robust safety management program include an area where you can set clear expectations, policies, and procedures. Again, tying into the driver management program. This helps align with safety and productivity. Track and improve driver behavior. With the safety compliance program, it allows you to look at historical analytics that gives rise to predictive indicators and behaviors. You can use incentive programs with the safety compliance program to promote good behavior. You can use discipline programs to discourage undesired behavior. Safety compliance programs allow you to devise corrective action plans to help drivers remain safe, compliant, and productive, and also fight fatigue with hours of service, safety, compliance, and coaching. It helps you centralize safety data for improved decision making. The data is power. Let's not sugarcoat it. It is powerful information for which driver safety managers are able to make informed decisions on to increase safety for the greater good. When you increase safety, you increase the odds, or you diminish the odds of fatalities on the road. You decrease cost and you improve the customer experience. Vehicle inspection records, those can be centralized in a safety program as well. One central location for easy access. You can also loop in your licensing and registration and renewals into this type of program, as well as hours of service log data. Violations, keeping these all in front of you in a centralized manner. Also, you can identify ongoing safety issues that are increasing risks and costing your fleet money, and improve preventative maintenance practices. Opportunities with a sound safety management program. Again, ELD technology integration into your safety program helps you achieve real-time opportunity for corrective action with the ELD integrations for hours of service compliance. Also, you can integrate your log auditing here as well. We also advise, it's also advisable to review your log data on a very frequent basis, and be connected with their drivers and assets for increased security. Another area and opportunity with these sound safety management program is leveraging daily electronic driver vehicle inspection reports to reduce inspection times by 65%. Automated alerts for driver vehicle inspection reports take the guesswork out of when and how to put management in the driver's seat. And finally, GPS integrations to validate inspection locations. Our fourth area here is asset tracking and management. With asset tracking and management, what we're talking about here, the mission statement here for the fleet manager is to track and effectively manage the organization's assets to ensure maximum utilization and fleet efficiency for increased safety, enhanced operational performance, and ultimately exceed the customer's expectations. Top benefits of a centralized asset tracking and management program: real-time fleet visibility. You track your vehicles and loads for customer excellence. Know where your drivers are and your assets are at any point in time. It helps with planning and logistics management. It helps keep customers in the loop on their shipments for those customers that rely on just-in-time JIT deliveries. Helps with historical assignments. There's so much that can be gained about the data that you can get when you're looking at, who was in a vehicle at any particular time and what kind of vehicle were they in. Making distinct connections between drivers and assets to assess the likelihood of accidents, fines, predictive safety, fuel efficiency, and performance tracking is a must. And finally, inventory and performance management. You manage your assets. This particularly holds true when you're, and is very helpful when you have assets at different locations. Just centralizing this in one spot makes things much easier. Helps you manage asset risk factors using vehicle diagnostics and maintenance data. Again, integrate with ELD and GPS information. Manage and monitor life cycle costs of your assets. Add asset utilization and profitability analysis. Helps to reduce theft and asset loss, and helps to track asset performance and manage risk. And finally, planning routes of travel, scheduling with customers, so you can improve upon your customer experience by letting them know when they can expect delivery. Top 3 opportunities: GPS dispatch and mapping integration. Again, it goes without saying, the technology coupled with a sound asset tracking management system is far-reaching. Helps you identify real-time costly out-of-route mileage, excess fuel consumption, and to minimize unnecessary fuel tax exposure. Helps integrate, another opportunity is to integrate vehicle diagnostics from the ECM, and this helps with increased safety. Vehicle diagnostics help to give the visibility to see when maintenance issues before they become a problem. And route optimization. This kind of puts you in control of your environment. Route planning to avoid roadblocks ahead, closed roads if there's an accident ahead, roads under maintenance, or lanes closed even. And also helps with fuel tax planning and minimizes tax exposure. And finally, last area, which we're going to dig in a little bit deeper on, is your fleet fuel management system. Benefits here helps you gain real-time visibility into the driver purchasing and consumption behaviors. Helps you understand the correlation between driver road behavior, net fuel cost, and fuel tax impact. Gives you that visibility to out of route. You know, we've touched on that a couple times already. When drivers go out of their prescribed route. Helps to gain visibility into vehicle fuel efficiency and performance management. You can look at MPG, or if you're in Canada, KPL, kilometer per liter analysis. Helps you identify which trucks are performing best, and helps you to link fuel consumption to tire type, engine type for predictive metric-based maintenance scheduling. Finally, helps cultivate a desired behavior as well. Incentivize drivers to attain desired KPIs or MPGs. The better performance they have on the road with their vehicle, the rewards will reap. And driver fuel chargeback reports as well. And for organizations that charge their customers or their drivers back for the fuel consumed, the fuel taxes incurred, this will help as well. And let's not forget our fleet manager's mission statement is to maximize asset utilization, contain cost, and control consumption through the effective management of the organization's greatest operating costs, fuel. Top 3 opportunities to optimize fuel utilization. Integrating fuel data with GPS helps identify theft, helps spot driver falsification, safety, and saves money, and also gauge fuel efficiency. Another opportunity is fuel tax management. Marrying the GPS information and mapping with fuel data helps to streamline fuel tax reporting. And then finally, blending with telematics and vehicle diagnostics, fuel efficiency, cost. What other factors affect your fuel efficiency and your fuel cost? Tire type, engine type, driver behavior. What other things are there at play that help to drive your fuel cost in the direction it's going? Now we're going to take a little bit more of a deep dive. This is one of my areas of specialty, fuel tax management. So fuel tax overview was created in 1983 to simplify the use, tax reporting, apportionment, and distribution process for carriers. It is a state and provincial tax on qualified motor vehicles that travel in 2 more jurisdictions and have one of the 2 following. They have 2 or more axles and gross vehicle weight of greater than 26,001 pounds, or have 3 or more axles regardless of weight. You have to file a tax return quarterly with your base jurisdiction. Each base jurisdiction acts as a clearinghouse, which simplifies the apportionment and tax distribution process to the other jurisdictions. So you don't have to file a tax return in every single jurisdiction you go in. Just one return with your base. And this tax return helps really determine where you burn the fuel, where the apportioned taxes should go. Fuel tax management, so it's a science, it really is. For all qualified commercial motor vehicles within a given reporting period in accordance with the base jurisdiction guidelines, all carriers are required to interpret and record total distance traveled by truck by jurisdiction. You can use trip sheets or GPS or ELD information to get this information, aggregate your distance. You got to record total fuel purchased by vehicle, by truck, by jurisdiction. And again, you can use paper fuel slips, fuel card download, or bulk fuel receipts. Again, we're touching base on a couple areas that we just recently discussed. A fuel card download that ties in with your fuel management program. Carriers are required to audit and review their records for compliance. Summarize your distance and fuel records by jurisdiction, and you apply your quarterly tax rates prepare quarterly if the returns and file. And finally, you have to retain all of your records and report for 7 years. So what is non-compliance? What does non-compliance look like in terms of fuel tax management? So when under audit, a carrier may be found to be non-compliant if a carrier is unable to produce any source documentation whatsoever. They file a return, auditor comes and asks for the source documentation. How did you get to this return? Carrier can produce nothing. They'll be found to be non-compliant. Carriers unable to produce odometer readings. An auditor will always want to foot and compare what was reported per vehicle to the odometer readings, which is, again, powerful data that could come from your telematics, from your ECM, could come from vehicle maintenance, from your asset management tracking system. You can be found non-compliant if your accounting system, your distance accounting system is found to be inadequate or produces output in consistent error. Your auditor finds that source documentation is illegible, not able to interpret. Auditor finds missing distance or fuel transaction or identifies continuity gaps. Auditor finds material under or over-reported distance, error factoring, and returns are not prepared in accordance with jurisdictional guidelines. So found to be non-compliant, a carrier could be defaulted to a 4.0 MPG and will be subject to imputed additional tax. This is tax which you really shouldn't be paying as long as you're managing your fuel system accordingly. But if found to be non-compliant in audit, you could be subject to imputed additional tax, which means additional tax, again, that you did not pay for at the pump. If you look at some of our audit statistics over the years of 2015 through 2018, you can see that a large portion of your carriers are, out of the ones that were audited, a portion of those are assessed. So the rate as assessments is typically very high. The auditors will find something, they will dig. Fuel tax management. The auditor's goal is to determine the accuracy of jurisdictional, distance, and tax-paid fuel totals. That's their goal. So as a fleet manager, that should also be your goal, is to determine the accuracy of jurisdictional distance and tax-paid fuel totals before you file. Two components, distance and fuel. So how would you as a fleet manager determine this accuracy? If you're using GPS, an auditor would require and route GPS positions to determine representativeness or reported distance. So that's something that the fleet manager should look into. They should align with this practice. Repeat the same steps. Auditors will examine trip records to ensure data entry accuracy. So again, if you're using trip sheets, one of the things that would be advisable is to make sure that you're reviewing the accuracy of those trip sheets and the data entry that occurs to get those trip sheets into your distance accounting system. Auditor will attempt to identify and fill continuity gaps. So that's another thing. We want to make sure that, when you're reviewing your data for accuracy, you're looking for continuity gaps between trips, gaps between GPS positions. If the GPS went down for a specific amount of time, what are you doing to fill those gaps? And the auditor, if the auditor finds those gaps, they will do something to fill in those gaps and determine how much distance was missing. And odometer readings too. They'll look at what was reported per truck and the odometer readings per truck and see if there's any variance there. As far as fuel goes, the auditor wants to ensure that 100% of the fuel is captured and recorded in your fuel tax management system and made its way onto the fuel tax if the return. Want to make sure that non-applicable fuel, which is like reefer fuel or refrigerated fuel, or DEF, excluded from your fuel tax reporting. And I also want to make sure that your fuel was matched to the correct truck. So again, these are all things that should be part of your fuel management practice and procedure. Again, your goal as a carrier, as a fleet manager, do what the auditor is going to do before they do it. So that way, when they do it, it's already been done, and all they're doing is just validating what you've done. Management is key. Finding an expert. That could be you, the fleet manager, or you can staff it in-house. You can outsource to a TPA, or you can become one yourself. You want to apply compliant record keeping. You want to know if an IRP and your base jurisdiction approve source documentation record types and minimum record keeping requirements. Routes of travel with state line crossing is something you will want to maintain or be able to produce should you be audited, should the auditor ask. Trip sheet and GPS record keeping requirements. You want to be fully aware of what those requirements are per your jurisdiction, and make sure you're compliant record keeping with your tax paid fuel receipts and your fuel management system. Recommended data processing and audit practice. Again, as management of your fuel tax program is key. Accurate trip sheet entry. Route GPS just like an auditor will do, and become cautious of GPS vendor printouts, summaries. How are those being generated? You want to check with your GPS vendor to make sure that they follow the same procedural output methods that an auditor may use. You want to identify and fix all continuity gaps to ensure 100% continuity. GPS disruptions and trip sheet gaps. Those are the things you want to look at in your management of your fuel accounting system. Match all fuel purchases to the truck. Report 100% of your tax paid fuel. And also, if you have a bulk facility or you get bulk fuel, you want to reconcile your bulk fuel withdrawals and deposits. Finally, you do want to retain all of your source data for 7 years if the NIRP. If you're using a GPS distance summary from your GPS vendor, again, we're looking at the technology here, but the auditor will dig deep into that technology and those printouts that you could get from your GPS vendor. So things you'll want to touch base with your vendors. How's continuity filled? What happens when a GPS unit goes down and there's a gap in communication? How is that gap filled? Are those reports you're getting, are they complete and accurate? Ask your GPS vendor, how can you audit these jurisdictional summaries for continuity? If it's just a printout and this says state miles, total miles by state, province, how can you audit that? How can you look under the hood? What type of tools does your GPS service provider, your vendor, have for you to ensure 100% continuity compliance? Our GPS positions with truck number, date, timestamp, odometer readings, are they available? Should you get audited? That's what the auditor will ask for. Is there any additional cost to store and obtain historical GPS information with your GPS vendor? Ask your GPS vendor, do they retain historical data? What do they retain and for how long? So you can have a high level of confidence and assurance. Should you get audited, you can go to your GPS vendor and readily, that information would be readily available. And our distance summary is assigned to the trucker driver. Those are some things you'll just want to, you'll want to look into and know. And with some fleet management software systems, you can take this information and download it through an API into your fleet management software. So that could take the guesswork out of everything that we've just covered here. Other tax savings, refunds, the tax you pay at the pump on fuel that wasn't used to power the vehicle, so to speak. You have reefer fuel refunds. This is used for refrigerated carriers, helps keep the freight in the trailer cold. So you can buy tax paid fuel at the pump is clear diesel, I should say. The fuel that goes into a separate tank and use it to refrigerate trailers, you could be eligible for reefer fuel refunds there. PTO, this is also a popular area, PTO power takeoff refunds. PTO is a device that transfers mechanical power from the engine to another piece of equipment. The fuel isn't used in this process is refundable. The tax paid fuel. APU, auxiliary power unit refunds, used for climate control again in cabs of the trucks. And DPF, diesel particulate filter refunds. The filter is for the emission standards, and the fuel is used in combustion process to clean the filter. Things to know about reefer fuel refunds, the most popular here. Refunds are on clear diesel only. There's no tax paid on dyed diesel, so no refunds there. Know your state rules and regulations. Some states offer full refunds, other offers partial, and some don't offer any. So something to be aware of there. Not all states offer reefer fuel refunds. Texas does not offer, so don't ask there. And based upon where reefer is purchased, not where it's burned. So like with fuel tax returns, it's based upon largely where the fuel is burned. But with reefer fuel refunds, The refunds are based upon where the fuel is purchased, not exactly where it's used or consumed, not what jurisdiction. PTO, be aware, based on case study, is constantly changing, so you want to be aware of your availability to obtain PTO refunds. APUs, clear diesel only. Regular meetings are required, so it could be time consuming to gather this information. You could leverage your telematics information. Some offer APU measurement, so the regular meter reading measurement with that service. No refunds are available for battery operated APUs as well. And DPF with diesel particulate filters, the refunds, is becoming increasingly difficult to gather data for these refunds. The states are also challenging refund claims here much more frequently. And here's my contact information. Charles Farone, area leader. Could be reached at the following email address, phone number, and extension. Always happy to take calls and answer your most pressing questions that relate to total fleet management and all the areas that make that up. We have Ray Proctor as well, area leader. Can't speak for Ray, but I'm sure he'd be very happy to hear from you and answer any questions that you may have regarding fleet management. Ray's area of expertise, licensing, permitting, registrations, and authorities, be able to help you out in any way, shape, or form. Finally, Q&A.
Awesome. That was great information. Charles, Ray, thank you so much for taking the time out of your busy days to share that with our attendees today. A little bit of housekeeping before we dive into the Q&A. We are obviously a little bit tight on time. We're going to answer as many questions as we can today. If we're unable to answer your specific question, we'll reach out to you after the conference. So please don't hesitate to throw your questions down there. We will answer them all, but we might have to reach out to some people after Day with DISA. Additionally, if you'd like a copy of this presentation, there's a download section or a materials section at the bottom right. Please go ahead and click on that section and you should be able to download a PDF of the presentation. Without further ado, Ray, Charles, let's go ahead and dive into some Q&A here. How long do I need to retain fuel tax information for audit purposes?
7 years. You want to retain your fuel tax information for a minimum of 5, but also your fuel tax information, specifically the distance, that ties in with your IRP. So what we always recommend is we save all of our information for a minimum of 7 years. And also what we like to think about too, in the odd case where the IRS comes to you and they want to audit your income tax returns, those fuel tax returns are part of your income tax returns as an expense. So they could be called upon during audit. We've seen it a couple times, and we always like to say that be prepared to support any audit. So 7 years is the recommendation there.
Great. Can one vehicle be both interstate and intrastate?
Great question. The answer is no. It should be one or the other. It's determined upon whether that vehicle is moving across state lines and how much of that time it's moving across state lines. The asset management program that we talk about, the owners of that system or that management program determine where that asset is registered and where it's traveling. So if it's an asset that's doing local deliveries in a particular jurisdiction or state, it makes complete sense for it to be base plated and registered within that state. But if it's some sort of long haul type scenario where it's going through different jurisdictions, you'd look at IRP and have an interstate program put in place.
And then another question that came in was, what does a fleet management software look like?
So a fleet management system, like a software deployment, depending on the size of the organization, if you're talking enterprise level versus all the way down to one driver, one owner operator, it all depends upon, number one, to what extent you want to manage your fleet. One owner operator, that could be done, easily on, I hate to say paper and pencil, but it could be managed very easily with one person and without the capital expenditure of spending that time and deployment on software, so to speak. But it could certainly be done. It absolutely could be done. As you grow, as an organization grows, the need to manage becomes much more critical. And when you get to the enterprise level, you have so many different systems. Technology is obviously leveraged to the T. You really want to start thinking about how can I start tying all this information together into one comprehensive, holistic platform. And that's where the software comes into play. You'll sit with a vendor and they'll ask you what your most important concerns are. What do you want to focus on? And they will tailor that, their recommendation to you as to what that deployment might look like. But I do know at the enterprise level, they do take time. I've seen these last years. There's lots of integrations that take place, the build outs of the customer accounts, the carrier accounts, I should say, integrating their customers in there. It is a very lengthy project. So I would expect, my consult would be to expect a long project, but it is a thorough project. It is very thorough and comprehensive, and the rewards are, they're outstanding. Looking at it from that perspective, the information that you can gather when you start tying those separate disparate systems together, it's insane. It's something that it really allows you to take your organization to the next level when you tie it all together.
Next question. If we have assets that are plated in a specific jurisdiction, can they travel across state lines?
Yeah, I'll go ahead and take that one. It follows the IRP program and base plating discussion that we had. So again, if you have something that's not moving out of state across that state line, it makes perfect sense to have that vehicle base plated in the jurisdiction that it's in. Again, and that might change, and it does in fleets all the time. We have scenarios where a unit might be operating in a particular jurisdiction, and now they want that vehicle to move interstate for some reason. So we can actually be involved in that process to convert from a base plate jurisdiction to an IRP, how we go setting up the account, the accountability behind that program as it starts to roll out. So yeah, it's either one or the other. If it's interstate, obviously the vehicle can move across different jurisdictions. Base plate again is in the jurisdiction that it stays within. Gotcha.
Hey, thank you so much both, Ray, Charles, for spending a couple minutes and sharing your wisdom with all of our attendees. I know we're out of time here. Any real quick last words?
We're here to help. We've been doing this for a really long time. We know obviously what these different programs are entailing, and we'd love to be able to be a resource for you to talk about how we can help.
Yeah, I will second that, and also, we absolutely love to hear from the users out there, our customers, not everybody out there. We love to help. And secondly, just to make sure, we hope everyone is safe and well during this difficult time. Always, we wish to be in front of our audience, but this is something that's still very impactful, and I'm very passionate about this. And thank you all for joining and listening in.
Thank you both. Yeah, hopefully next year we're in person for Day with DISA. All right, with that, that's all we got. Thank you so much. Bye-bye.